okay, we just took care of part one, right? The three different types of term policies. One was your level term, where your benefit starts at 100,000 or whatever it is you pick and ends at 100,000. The other one was a decreasing term. That was one of them that we would use to like collateralize a mortgage, right? So as you're paying down your mortgage, you don't want to, if you had a $300,000 mortgage and you paid it down for 15 years, do you want the guy that lent you the money or the girl that lent you the money to get 300,000, or you want to give them the 150 that they're owed? You want it to go down. You don't want them to get more, so you would collateralize a loan or something like that with decreasing term. On the increasing term, you just want to make sure your bang for your buck stays the same. So if we have a $100,000 policy today, I can promise you in 20, 30 years, that $100,000 isn't going to be the same, right? Inflation. So some of these increasing terms are tied to a consumer price index, which allows you to increase the amount of insurance that you're getting without proving insurability. Now, let's talk about what happens once this term ends, okay? Because once the term ends, you can either renew your policy or you can convert your policy. So when you have a feature with your policies that allow you to renew, that means that they're allowing you to get back into it. Now, they're not necessarily saying, like with the increasing term, they're saying that you can increase the amount of insurance. The option to renew doesn't guarantee you the right to increase the amount. That's like a cost of living rider. The option to renew is basically saying perhaps you had a 10-year policy, and at the end of that 10-year term, you wanted to add another 10 years to it. Well, your option to renew would allow you to do that without having to prove that you were insurable. That's really nice because maybe you were no longer insurable. So that's what your option to renew is. Now, your option to convert, well, we have this term policy that's temporary, right? The other one, the permanent version of a temporary policy, is a whole life policy. So what would we convert? We would convert a term policy into a whole life policy. Now, there's really, when it comes to this process on the conversion, I just need you to remember some vocab here. If you get to the end of your term and you're converting to a whole life policy, let me ask you a question. Would you want me to rate your policy premiums based on, let's just say, you wanted to convert your policy today, right? So I'm 48 years old. I had a 20-year term policy that I took out when I was 28 years old. It's expiring today, and I want to convert it to a whole life policy. Which one do you think would be cheaper? For me to go ahead and be rated based on my age today at 48, or the original age I took out the policy at 28? It would be the 28, right? So what you need to remember on your option to convert is that you either can convert your policy with the attained age, which is the day that you're attaining the conversion, the older age, or the original age, the original day you took out the original term policy. Of course, it's going to be way cheaper on your premiums if you take the original age model of converting your term policy into a whole life policy. But just like anything else, if you want a feature, you need to pay for a feature. Just like when we talk about the renewability, what do you think is more expensive? Of course, it's more expensive for a cost of living rider that allows you to increase the amount of insurance without proving insurability over another policy over here that just allows you to renew your policy without increasing the limits. So there you go, guys. You have your three different term policies, your level, your decreasing, and your increasing. At the end of those terms, you can either renew without evidence of insurability, or you can convert without evidence of insurability. And, excuse me, and if you do convert, the two options that you would have chosen back in the days when you first set it up was, do you want to convert at the age you originally took out your first term policy, or the age where you wanted to convert your policy from term to whole life? Remember, the attained age means you're getting it when you're old. I'm still in my prime, baby, but I would have got a much better deal at 28. So just remember that. That was much better.